You're listening to Up1Notch, a podcast where I explore the tech business world. My name is Mohammad Aoun, and I'm a growth accelerator for tech companies looking to scale their businesses. I'm sitting down with software industry leaders, startup founders, and tech experts. Tune in to hear about the latest and greatest from the tech world. Hi, Eric. How are you doing today?
Good to be here.
Well, thank you so much for taking the time for this episode of Up1Notch podcast. And it's a pleasure to have you today here. And hopefully we're going to be talking about something really interesting in the crypto space now that you're here. And the audience will be able to learn a lot from your experience.
Indeed. And there are lots and lots of exciting things in our space. So yeah, we have a lot to talk about.
Absolutely. So let me get started with, first of all, the first obvious question. Let's start off with a basic introduction about yourself. I know that you've spent about 35 years on Wall Street, so I don't want to kind of misput anything. So I'll just leave it on to you to explain a little bit about your background, and then we can take it forward from there.
Yeah, sure. So I'm currently the Chief Technology Officer for Cryptospace, which is a custodianless exchange that spans is international in nature, so it has presence in the United States and Mexico, and is extending throughout Latin America. So we are very heavily focused as the nexus between sovereign currencies and cryptocurrencies in a market that is nascent and very hungry for this kind of technology and the kinds of solutions that we bring. I'm also the co-founder of Alluvial Rewards, which is the licensee of the technology stack for the Vow ecosystem. And Vow is really an incredible project that we can talk about, a little bit later. And I'm involved in a number of other crypto projects and have been since 2012 when I started. So I was the global ambassador for Mosic, a Chinese-based music rights management company on the blockchain, of course. I'm an advisor to Infium, which is a large aggregator of investment opportunities and investors around the world. I'm co-founder of Abaku Capital, which is basically a capital formation firm, and we make investments in the space. And I'm also involved in New Ocean, which is an initiative to basically convert mortgages into Bitcoin positions. And I've got my fingers in lots of other things. So I'm well aware of the space and what's. Sorry, go ahead.
Right. So given your extensive experience working in the crypto market specifically, and to bring into context the Vow project and all of that, let's start a little bit about, like, for example, some basic questions around the platform itself. Vow, what does it really help people do? What exactly is the value that it delivers for people? Is it like a platform where you can go and buy some altcoins? Is that a platform within itself, like a specific altcoin similar to Dodge, Ripple? If it's that, then what's the differentiating factor between this altcoin versus others? If you can talk a little bit about that.
Yeah, so Vow is unlike any other crypto platform out there. It is nominally hosted on the blockchain, but it's really a financial innovation. And we haven't really had a financial innovation since probably the early 80s with the invention of options, right? So what was his name? Black and Scholes. They did the initial math work to figure out the models for options, and since that time we've had tons of variations on a theme, swaps and other kinds of instruments, CDOs and all this kind of stuff, but none of those really are innovations per se. Vow is an innovation. Actually, liquidity pools are an innovation as well. They're a very interesting device from a financial perspective. In short, Vow is a mechanism that eliminates the costs to merchants of loyalty reward systems. So let's say that you have a product that costs you $80 and you want to sell it for $100, and you go to market and you find out that actually at $100 no one will buy it. So you say, okay, well, or maybe some people will buy it, right? But then the demand sort of disappears. And then you say, well, I've still got a lot of this product. How about if I sell it for 95? And you might find a little bit of a market there. And if you sell it at 90, you find a bit more market. And as you lower the price, you find that the market widens, right? The problem is that you're basically letting go of profit. So in your balance sheet, you have a especially if you're a public company, but equally to private companies, you have an earnings per share metric, right? Every dollar that you discount off of some product, it affects your earnings per share, which for public companies, there's a PE ratio. That means that your stock is going to take a hit by the multiple of the PE, right? And that's pretty painful. So what Vow does is it allows a company to discount a product without taking a hit on the bottom line. And that is really valuable, because it means that the customer, the retail customer, gets product at a lower price, but the company still gets to maintain its profit lines, right?
So that sounds like a very interesting idea. So what that really means is, let's say if I want to sell a product at 100, but the market value of it is like, for example, 80ish, or people are like generally they're expecting it to be around 80, I'm still able to sell it at 100, but who pays for the difference? It's definitely not the customer, from what it seems what you told about the Vow. I mean, I'm probably going to subscribe on Vow right away after this call, but just asking that who pays for the difference?
Yeah, no, that's exactly the magic there, right? So when you, as a merchant, when you onboard onto the Vow ecosystem, what happens is that you are given the power to issue money, right? So to some extent, Vow can be viewed in many different ways. Some people will look at Vow and say, oh, it's a better mousetrap, right? It's a loyalty rewards program of sorts, but it's just better in some way. Other people will look at it and say, oh, it's actually a new economic model, right? It's something that we've never done before. Other people will look at it and say, oh, this is the decentralization of currency issuance. So what does it mean, right? Decentralization of currency issuance. So if you think about the US dollar, how many dollars exist today? And how do they come into existence, right? How are there more dollars today than there were yesterday? And the answer to that is of certain complexity, but let's just say, for the sake of a simpler conversation, there is an entity called the Federal Reserve, which is a central bank, and it has the power to create money, right? Now, when they create money, what do they do with this money that they just created, right? And the answer is they put it in their own pockets. And eventually they put it into the pockets of their member banks. And eventually the money filters out to the within the banking layer and other kinds of, institutionalized networks, right? Vow, what it does is, and so the same thing for the Bank of England and the Central Bank of Japan and so on and so forth. All these different monetary supplies are all managed by one entity. Vow is a mechanism by which, rather than having a central bank manage the monetary supply, you have a collective of merchants do it. And this is very interesting from a political perspective, even from a theoretical perspective, because the reasons for which a central bank will mint additional currency are very different from the reasons why a merchant would do so. Central banks typically are political creatures, right? They have reasons. They have stated reasons nominally like price stability or growth or something of the sort, but in reality, there are political pressures on the banks that have to do with elections or have to do with unemployment or with inflation or things like that. And there's an awful lot of sort of backdoor dealing there where certain very small numbers of people within society benefit greatly from these kinds of decisions and from the drive from that power, right? And then everybody else gets left in the cold. And so what that does is it ultimately drives, it destroys the middle class. And we can see that empirically, even in as great a society as is American society, and as powerful as it is, we have seen the last 40 or 50 years devastate the middle class, and we have a great deal of poverty here. And these are really the effects of having this kind of centralized power over the monetary issuance. So when you look at a merchant and he has all of a sudden the power to issue money, what's he going to do with the money, right? He can print it, but what's he going to do with it? And the answer is what he really wants to do is he wants to do more business. So he's going to lower his prices so that more people can afford his product. And that is beneficial to the retail consumer, and it's beneficial to the merchant, obviously. And it's also beneficial, so it's beneficial downstream and it's beneficial upstream. The more business that merchant does, the more the manufacturers have to produce, the more the warehousers have to manage the supply, the more that transportation companies have to, the more insurance companies get involved. The entire sort of supply side benefits as well as the demand side. Right. So, to walk you quickly through how Vow changes this, the actual mechanics of it, what happens is this. A merchant joins the Vow ecosystem, and in order to participate, he has to buy some Vow. And Vow is a fixed supply token, just like Bitcoin, right? There's a fixed amount of it. So when he buys the Vow, he then stakes it, staking is a process by which the owner of a token or a certain amount of tokens can lock them up in a smart contract. And in return for staking this or locking up the value, the smart contract generates 5 times the value of the amount locked away in a currency called a V currency, right? So if the merchant is in the United States, then V dollars are minted. If the merchant is in Europe, then V euro are minted, and if the merchant is in the UK, then V pounds are minted, et cetera, right? So in essence, you take $100, you buy Vow and you stake it, and you get 500 V dollars, which you can now give away as discounts to your customers. Now, what's interesting about this is that those V dollars are basically free. They didn't cost you anything, because the $100 that you took and you bought Vow with is not a cost. That's an investment. It's still sitting on your balance sheet, right? It accrues to the total value of your company. And when your investors look at it, you say, oh, you have $100 sitting on some asset there called Vow. And so that's good. You have reserves. But at the same time, you were able to issue $500 worth of discounts to your customers. So as a merchant, you say, wow, that's a great idea, right? But the real question is, when you as the consumer receives a $20 20 V dollar discount, what is it worth? What's a V dollar really, right? And if I gave you like 20, X or Y tokens, the first question would be, well, what are they worth? In the case of V dollars, at least the
liquidity of it, right?
Well, so liquidity, that's a different thing, but just think about pricing or valuation, right? If I give you 20 Luna tokens, you're going to say, okay, I now have 20 Luna tokens, but what are they valued at in dollar terms? Because I think in dollar terms, right? And the answer is, well, I have no idea, right? When you receive 20 V dollars, at least the cognitive load is removed. Because in your mind already, you're thinking, well, I have $20. They're just V dollars, but what exactly does that mean, right? And the answer is, and maybe more importantly, where can I spend them, right? Because if I can't spend them, then they're really worthless. And this is really the problem that that the entire loyalty rewards space has, right? If you fly on American Airlines, you get 20,000 miles worth of, okay, what are they worth? I have no idea, right? And the answer is actually depends, because if you use those 20,000 miles, like on American Airlines, they're worth a certain thing. But if you use them with some of their affiliate merchants, then you get a different value. And if you just want to cash them out, you get half the value. So the valuation of the points isn't at all clear. But in addition to that, where can I spend them? And the answer is I can't just spend them anywhere, right? Oh, I can only spend them with the airline itself, and only on Tuesdays, because that's, and not if there's a blue moon, and you get the seats at the back of the bus, and tons of conditions, right? So you have this asset that you really don't know how to use, and so we eliminate that, because a V dollar is nominally a dollar. You already are thinking of it as a dollar. You just want to know where can I spend it, and the answer is, you just bought a pair of shoes from some store, you got 20 V dollars back, and you walk out into a coffee shop and you can spend them there. And so if you can spend those V dollars pretty much anywhere, then they're as good as a dollar, right? As far as you're concerned, you actually did buy those shoes for $80, even though you paid 100 and you got 20 back, because the 20 are very usable anywhere. Right, and at that point, you have kind of so now you can look at dollars and say, how what are dollars anyway? Well, they're like these little pieces of paper that I keep in my pocket, right? But they're also a number on a bank account, which I can see in my phone app. And so these V dollars are really the same. I just have to look at a different app called the wallet.
Sure. Right. Sure, absolutely. So let me ask you this question, Eric. So what I'm understanding is that as long as a person is on the let's say the Vow ecosystem, obviously it makes a lot of sense. So for example, you had $100, you purchased, let's say, some Vow tokens for it, and then against that you got, let's say, V currency for, let's say, $500 worth, and you're in the ecosystem. Then absolutely you can reward each other, you can do gifts, you can utilize it in whichever way you see fit. But the question, even outside of the Vow ecosystem, still remains that, let's say, for example, if you look at the list of altcoins, if you look at like cryptocurrency and all that, there's so many of them that, let's say, for example, if you buy like the 357th top rated let's say cryptocurrency coin today, would you be able to sell it really that easily as compared to, let's say, if you were selling Bitcoin itself or Ripple or Ethereum, or for that matter, if you just had like $500 in your pocket? That is not the same exactly. Still, maybe it's due to the adoption is still obviously in its earlier phases, or is there other factors as well?
Well, so let me ask you a question. Do you ever look to sell dollars? Are you, by the way, are you in the US? Do you think in terms of dollars?
I'm currently outside of US, but okay. Yeah, we're pretty used to
in which country? In which country are you?
Currently, I'm in Pakistan.
Okay, so I don't know what the currency of Pakistan is.
Rupees, Pakistani rupees.
Okay, so do you ever think about selling Pakistani rupees?
Okay, are you talking about like forex trading? Are you? Typically we don't sell currency in that
exactly
specific like per se selling, but we buy things against it, right?
Yeah, the only time when we think about selling our currency is when we're going to get another currency. Like, for example, if I want to sell dollars to buy some euros, right? Because I'm going to Europe and I need some euros. So I may think of it as selling dollars, even though I will actually more likely think of it as buying euros, right? So the point is that you don't really think about selling the dollars. You think about spending the dollars, which is a very different proposition. Because when you're selling an asset, now I think about selling my house, right? And that is to say, I'm going to get money for it, not because I actually want the money, but because I no longer need the house, or I want a different house, or whatever it is, right? I need a house to live in, and I just don't want to I don't happen to want this one anymore. So I will sell it. And the money is a kind of an interim thing before I buy another house, right? So the concept of selling as opposed to spending are really two different concepts. And I would say probably all of the crypto coins that are out there, Bitcoin included, are really assets that people buy that they then think about selling, right? And if you think about selling, you're now playing in the space of exchanges and counterparties and liquidity and things of that sort, right? If you want to sell something,
much like forex, right? Much like forex, you do trading of this just to make money, right?
Yeah, exactly. Now, Vow doesn't face any of those issues because you just don't sell it. What you do is you spend it, and the question there is where can you spend it, right? And the answer to that is Vow is already operating in 11 countries, very soon 13 countries, and there are roughly 100,000 merchants that are already on board that accept this currency, right? And it's even interesting because the way that the system is constructed, let's suppose that you walk into this theoretical coffee shop with your V dollars, and they have never heard of Vow, right? But they do have their own gift card systems that they issue, right? You can buy a gift card from that coffee shop and give it to a friend, and that friend can show up and give them the gift card and get a cup of coffee. So what happens is the Vow app, when you walk into the store, it says, "Oh, I noticed that you are at this store," right? And you presumably want to buy some coffee. And so type in here how much the cup of coffee is going to cost you. And so you type in 5 V dollars, and then we in the back purchase a gift card from this store, and we display the QR code in the application. So you just walk up to the cashier and show it, and he goes, "Oh, I know what to do with one of those." And he takes his scanner, he scans it, and he hands you the cup of coffee, and he says, "Have a nice day." Right? And so you just spent your 5 V dollars, even though the store didn't even know that the 5 V dollars were in the middle of the process. Right? Now, that means that merchant, not being a participant in the Vow ecosystem, isn't benefiting from the currency issuance that is our primary value. But it does mean that then you have the entire world open to you to spend the money, which is what you want to do.
Right, sure. Okay. So let me ask you this question. Let's jump entirely into a different area, and let me ask you some basic questions around this whole ecosystem of how the blockchain ecosystem and all of these work. What exactly is token economics? I keep on hearing about this term token economics. What exactly is token economics?
Yeah, it's a very good question, and I actually wrote an article called a tokenomics primer, or primer, I guess is the right pronunciation, but because I get asked this question a lot, and also the usage of the term is there's a great deal of misuse of the term. I've seen many white papers where they have the token economics section, and all they do is they tell you there's a pie chart and tells you the founders get this much of the token, and the initial currency offering will sell this much of the token. That's what they call token economics, right? But that's not tokenomics at all. Token economics is essentially an analysis of how a token is used. In other words, how the token facilitates the transfer of value from one party to another, how it amplifies value or decreases value, how it can be used to punish bad actors within a system, all of these kinds of, how the token is integrated into the use cases of a particular ecosystem. That's really what token economics is, tokenomics.
Right. Okay.
And by the way, there's you can probably post at the end of this interview a link to my Medium website, which is just ekkis.medium.com, EKKIS, and there's an article in there for those who are interested called a tokenomics primer. So you can go read about, in greater detail about token economics.
Absolutely. Okay. So another question. So what exactly is a smart contract? And why do people would want to go into future and do contracting in future? What exactly would be the value of that? I mean, specifically in regards to, for example, the reason I'm asking, obviously, I do feel that obviously a lot of assets can grow in value in future. But the reason I'm asking is that specifically in context of, let's say, cryptocurrency, we've seen the volatility of the market. Like, for example, going one year at a certain point, Bitcoin is at 60,000. Now it's at 20,000, 19,000. There's a lot of volatility in the market, right? So in context to that, how do you see future contracts working? And how do you see, like, as a potential investment opportunity and things like that?
So let me start by saying that the term smart contract has a very specific meaning. It is a contract of sorts, but contracts are typically creatures of law, right? A contract is an agreement that is upheld within court systems. Smart contracts are not upheld within court systems, right? They are creatures of the blockchain, and specifically their code. So let's see. I sometimes like to explain in terms of actual use cases or a little storyline about, exemplary of the use of something. Let's imagine that you're a salesperson and you work for a company that has a commission structure, right? So when you get hired, you get told, well, if you sell more than $10, if you sell less than $10 of product, you will get 1%. But if you sell more than $10 of product, like between 10 and 20, you will get 1.2%. And if you sell more than $50 of product, then you will get, 1.5%. And if within a month you manage to reach a certain quota, you get a bonus of X or Y, right? So there's some computation there that is explained to you, and you go, okay, well, that sounds good, right? And that's your, now you start behaving according to or setting your targets according to this structure. And in order to properly compensate you, they write some piece of code that then watches what you're selling, and it makes the calculation and it figures out the proper commission. Now, that's all good, except that you don't have access to that piece of code. So you don't know that the computation is being done correctly, right? Now, you could make the argument that you can do the math yourself if you know it, right? And that can get rather complicated, and most people are never really going to do that, so they're just going to trust the code. But what really happens is that your employer then says, I'm spending too much money with this guy. I was too generous in my offer, and I want to take it back, but I don't want to let him know that, because if I do, then he's going to change his behavior, right? And his behavior is really profitable for me. So what he does is he goes and tweaks the code. He changes some of the parameters, right? And maybe even specifically for you, right? Because he can do that. And you don't know this. So what this really comes down to is that the execution of code is not trusted. It's running on his machine, and you have no access to that, and you can't see it, right? So a smart contract is a piece of code. It's the implementation in a trustless type of system, like a blockchain, of a piece of business logic. And the reason we need them is because we can't trust each other. Because every time that someone has a little bit of power, they use it at the expense of others for their own benefit. So with smart contracts, we have a mechanism that is impartial and has no self-interest. That's essentially what it is.
Much like anything done on a blockchain cannot be kind of it's foolproof, right? So the
Exactly.
contract is done on blockchain, right? So it's secure in that sense that it cannot be changed. It cannot be kind of you can't really hack it or something like that, right?
Yeah, the behavior is predictable and trustable, right? It's guaranteed to do. It's guaranteed to perform as it is expected to perform.
Okay, awesome. So thank you so much, Eric, for for joining in today on the episode of Up1Notch podcast. And let's stay connected. And wishing you the best for the Vow project and any other projects that you are part of.
Yeah, definitely. I mean, I'm happy to come on, and do this again anytime you like. So just reach out.
Absolutely. Thank you so much, Eric. Have a great day.
Take care.
Bye-bye.